Friends, in today's video, we will discuss Motilal Oswal Midcap Fund. We will discuss why the performance of Motilal Oswal Midcap Fund has been under pressure since around last 1 year. And if you want to exit Motilal Oswal Midcap Fund because of its underperformance, then which other good fund in the midcap category itself can be an alternative choice. Along with this, we will also explore that if you are an aggressive investor, then can you still remain invested in this fund? So, first of all, let us discuss the performance of Motilal Oswal Midcap Fund. As you might be aware, this fund has not been performing well for the last 6 months and it is underperforming category averages with a huge margin of 8 to 9% in its YTD and 6-month returns. But if you leave aside the ultra short term and near term time frames, then the performance of Motilal Oswal Midcap Fund has been quite good. Motilal Oswal Midcap Fund has outperformed its category averages, including 1 year time frame, despite the poor performance during last 6 months or so. Further, in 3 year and 5 year time frames, Motilal Oswal Midcap Fund's rank in the category has consistently remained at the number 1 position. Even in 1 year performance, it has outperformed the category average by around 7%, despite its poor performance in last 6 months. Further, starting from short time frames of 1 year to long term time frames of 10 years, it has outperformed its category averages in all time frames, which is not a mean achievement. Motilal Oswal Midcap Fund follows an aggressive high growth investment strategy. This fund has a portfolio turnover ratio of 184%, whereas the category average is 266%. Although this portfolio turnover ratio is less than the category average, yet still it is a quite high PE ratio. Portfolio turnover ratio and indicates an aggressive investment style. You can get an idea of how aggressive an investment strategy Motilal Oswal Midcap Fund follows from the fact that Motilal Oswal Midcap Fund has only 34 stocks in its portfolio, while the category average of stocks in portfolio of Midcap Fund category is 69 stocks. And therefore, you can conclude that Motilal Oswal Midcap Fund is a highly under-diversified mutual fund, and in such a situation, if 2, 3 or 4 stocks underperform for any reason, like some negative news coming out or their performance isn't up to the mark, then the NAV of such mutual funds get affected severely. Along with this, Motilal Oswal Midcap Fund invests in very high PE ratio stocks, which do offer good returns and growth. But the issue is that whenever there is a slowdown or a correction in such stocks, then the correction is very sharp. In fact, where the average PE ratio of category is only 22, the PE ratio of portfolio of Motilal Oswal Midcap Fund is 56. So the investment of Motilal Oswal Midcap Fund is in stocks which command a PE ratio that is almost 2.5 times more than the category average, which makes this fund a highly volatile fund. Similarly, there is also sectoral over-concentration in Motilal Oswal Midcap Fund, as while the category average for investment in top 3 sectors is 21%, whereas Motilal Oswal Midcap Fund has invested 38% of its corpus in the top 3 sectors, which is a very high concentration and makes Motilal Oswal Midcap Fund a risky choice. Further, as already discussed, Motilal Oswal Midcap Fund has only 34 stocks in its portfolio, and even among those 34 stocks, it has invested 37% of the total available funds in just top 5 stocks, which again is a very big risk. Motilal Oswal Midcap Fund has invested 37% of its equity exposure in just 5 stocks, whereas the category average is only 13%. So here too you can witness that there is 2 times more concentration in Motilal Oswal Midcap Fund. In other words, compared to the category average, investors of Motilal Oswal Midcap Fund only getting less than 50% sectoral diversification, which sometimes works in favor of this fund and sometimes against it. Another parameter that is very important to understand and which investors often ignore is that how within the category a fund has invested in companies market cap wise. Let us understand this with the example of Motilal Oswal Midcap Fund. This fund has invested in companies with very small market caps, whose average market cap is just rupees 3013 crores. On the other hand, the category average is rupees 70,451 crores. Here you can witness that Motilal Oswal Midcap Fund has invested in companies 5 times smaller than the midcap fund category. And the risk here is that companies with lower market cap are much more volatile. On the other hand, they also provide very high returns because the smaller the company in terms of market cap, the more growth potential it has. But also at the same time, such companies are highly vulnerable to market volatility. So, in conclusion, we can say that Motilal Oswal Midcap Fund is a fund that follows a very aggressive high growth investment strategy. But on the other hand, it is also a highly volatile fund, and an investor is bound to witness severe ups and downs in its NAV. One of the major reasons Motilal Oswal Midcap Fund is performing poorly from last 6 months is that this fund has invested only 68% in equities, and a large percentage of its corpus, that is a huge 32%, is in debt and cash, which means only two-thirds of its investable funds are invested in equity and remaining funds are in cash or debt, which is affecting its performance negatively. Please understand, when an investor invests in an aggressive growth fund like Motilal Oswal Midcap Fund, he doesn't invest with the mindset that only two-thirds of his fund will be deployed in equities and one-third will be put into cash and debt. If an investor has wanted to invest in debts, then he could have gone to some debt fund or some hybrid fund. But when an investor invests in an aggressively managed fund like Motilal Oswal Midcap Fund, his expectations are that the fund will aggressively invest his money in the equity and not in debts. So, this is also a major reason for the underperformance of Motilal Oswal Midcap Fund, because the returns investors are getting are based on only two-thirds of the assets of the fund, while one-third of money of investors is lying idle with Motilal Oswal Midcap Fund. In this section of the video, we will discuss if the performance of Motilal Oswal Midcap Fund is not up to the mark and this fund is giving you too much stress, and also due to the volatility in this fund, you want to exit from it. Then what is the other alternatives available to you in midcap fund category itself? So, if you look at other funds in the midcap fund category, then HDFC Midcap Fund appears to be a good alternative, which does not follow an aggressive growth investment strategy. Instead, the fund follows a value investment strategy, which is a fairly defensive investment strategy. And despite following such a defensive value investment strategy, this fund has generated excellent returns consistently in every time frame, let it be 1 year, 2 years, 3 years, 5 years, or 10 years, and has outperformed its category averages in all time frames, which is an outstanding performance, as it is not easy to outperform the category averages consistently without any exception from the short time frame of 1 year to the long term time frame of 10 years. Apart from this, even if you look at its near term performance, here too the fund is performing well. So in all aspects, in the short term and in the long term, in market corrections and during market uptrends, the performance of HDFC Midcap Fund has consistently been outstanding. Further, as you might be aware that funds that follow a value investment strategy, when the market falls, provide a good downside protection and don't fall much. However, when there is a bull run in the market, they don't rise as sharply as the funds that follow a growth investment strategy like the Motilal Oswal Midcap Fund. However, this is exactly the specialty of this fund, that despite following a value investment strategy, it has generated excellent returns during bull phases and also provided downside protection during market corrections. Now let us discuss long-term returns of HDFC Midcap Fund. In 5 years, it had delivered returns of 34.02%, which is an outstanding return, and even in 10 years, it had delivered 19% returns, and that too without much stress and volatility. And even if you compare it with Motilal Oswal Midcap Fund, its 10-year returns are 19%. while Motilal Oswal Midcap Fund has generated a return of 19.39%. So, if you look at the overall difference in the 10-year performance of both funds, it is just 0.39%, which is a negligible difference. However, please understand that the 10-year returns of Motilal Oswal Midcap Fund are after the 10% dent it has taken in its NAV over the past 6 months. Otherwise, Motilal Oswal Midcap Fund has been performing exceedingly well in the midcap fund category so far. So, if you are waiting to invest in the Motilal Oswal Midcap Fund when market goes under a correction and NAV of Motilal Oswal Midcap Fund comes down, then you can still invest in this fund as you are getting an opportunity to invest in Motilal Oswal Midcap Fund at a significantly lower NAV. Further, it is still a good fund that is likely to require. However, to see it happening, you might need to give it some more time. On the other hand, if you can't endure high volatility and you don't like such volatile funds like Motilal Oswal Midcap Fund and instead want consistent good returns, then for such investors, HDFC Midcap Fund can be an ideal choice, which provides consistently high returns with low volatility and follows a defensive value investment strategy, invests in low PE stocks, and is more diversified than Motilal Oswal Midcap Fund.